welcome back to our show, your show, Let's Talk Stocks. And with me this morning is Mr. Ryan Strachan, who's a senior stockbroker, investment manager, financial analyst, whichever name he fits the bill. Ryan, welcome to the show, man.
Thank you, Nielsen. Happy
Ryan,
New Year.
Happy New Year, man. We should have done this at the start of January.
Such is life. These things happen.
But then we may have made incorrect predictions given President number 47.
A lot of things are moving at the same time, yeah, for sure.
Talk to me about what's the markets looking like for the rest of the year.
I believe we'll see a resurgence locally, especially locally. I think we're at the point in Jamaica now. We'll start at home, and then we go. We have not recovered, the main market has not recovered to pre-COVID levels yet.
True.
I believe we've gone through the storm, the entities. We've heard about entities intending to expand.
Yes.
They've deployed capital in pursuit of expansion and are now at the point where I believe they'll be reaping the fruit of that. I'm not going to name the specific ones, but they're in manufacturing. So I think they will drive the upswing in the markets. I believe we'll see interest rates fall further. That should further stimulate activity, particularly the closer we get to Q3. Let summer pass. By then, I believe an election should be behind us. And elections also tend to bring activity as well. You know, spending and advertising. As such, we should see even more stimulation in the economy at that time, injection of capital. As we go into Q4, which is typically a very busy time in the markets,
It is.
I do believe we'll start to see tremendous increases in some of the more popular listed entities. There's talk that where NCB goes, the market goes because of its sheer size. The CEO in times past has said, well, they expected 25 billion last year. They hit that number on the button. I do expect that they'll be in that 30 billion or so range. Now, Scotia is also growing. As a result of that, increased profitability, increased market capitalization, manufacturers will hold their own. So I think locally, we should see some more listings too. And I think that will all contribute to a vote of confidence. That, well, no pun intended, that will also now drive things upwards.
Ryan, it's interesting that you went election, but you also spoke of reducing interest rates.
Yeah.
Now, there are a couple of things that's happening. Elections mean bigger spending, more money chasing things out there, can be inflationary.
Yeah.
Will BOJ still take that plunge, even with the additional spending, still putting more spending power in the hands of investors, consumers?
Yeah, because remember, inflation is the assumption that the demand outweighs the supply to the extent that it drives price. So it's either you reduce demand or you increase supply. I think as well, we are now seeing more infrastructure spend, and that in and of itself is going to facilitate an increasing of supply, short of there being any natural disasters that really impair our economic capacity or capacity to produce. So assuming all being equal, I do think we will have increased supply. There will be increased retail presence, increased wholesale presence, increased accessibility by virtue of road work, bridges being repaired.
Big one.
Water. Once water lines are in place, you can have your restaurants, you can have your KFCs, you can have your other QSRs, you can have your stores.
Prime Minister says is likely to sell the rest of TJH, Trans-Jamaican Highway.
Good move.
Woodstock company has been doing well. Is the timing right, and will the market take it up?
The market will take it up. Because the common refrain is, from the big guys, we can't get stock. Now you have 10 billion worth of a dividend payer that's expected to pay more over time coming to market. Pension funds, institutionals, overseas players because they can buy it in US. They'll gobble it.
Two things though. So we saw towards the end of the last quarter, government shortfall in revenue. Will the spend still go ahead will they be able to make up that shortfall going forward, going into budget? Are we likely to see taxes? What's the play there?
Remember, the shortfall was on income tax, but they recovered it on GCT and other areas. So it was short in one, but made up for another. So in a sense, it's the same. Will the spend continue? Yes. Especially, remember, the capital expenditure budget has been already set separate from the recurrent budget, right? So then they've gotten a significant inflow from King Air, and this 10 billion from TGH. My view on that is that those funds should be more steered towards capital expenditure, because it would seem we already have a fair handle. They already have a fair handle on the recurrent expenditure from tax revenues, which is not perfect yet. There's still quite a few gaps in the income tax process, but it's getting better. And it should be over time as we see more tax offices constructed and it's a more efficient space. But nevertheless, between GCT, the other surcharges, income tax, it's going to be more or less in line.
And we're still seeing a push for greater efficiency with tax office of Jamaica. Better collection of taxes. That should help.
And that will therefore cause for that recurrent expenditure to be sustained.
Minister Favour Williams, going into her first budget presentation, is corporate comfortable?
Very. I don't think we've heard many calls or complaints. It's almost been so quiet that the transition could be classified as seamless.
It has been seamless.
Has been seamless. And I don't expect taxes this year. I believe further distributions to the most needy Jamaicans will follow.
Social programs.
And in a way that's very effective. So you had the $20,000 give back, reverse tax, which has been extended to a much wider base, because at first I believe it was persons who were tax compliant via employers. Now it's going to be anybody who can prove they earn below $3 million, which is a start. You know, I do believe there will be more things of that nature within the budget. Now, what does that look like? I have absolutely no idea. But as the economic pool grows, or at least rebounds to where it was before Beryl, I do think we should expect a budget that's more supportive of growth and driving of activity and stimulation in the economy, generally speaking. So I'm bullish. I think the biggest indicator or leading indicator of Jamaican viability is infrastructure spend.
Absolutely.
To the extent that we see infrastructure spend, we can almost apply a percentage of growth that we expect to result from it every year. Because there's just some things you cannot do without stable water supply, predictable water supply.
Absolutely.
You can, for health and sanitation reason, there are some expansions you cannot do until you have sewage lines. You will not get approvals.
Talk about infrastructure expansion. St. Thomas is pretty much on its way to completion in terms of both the road network and the new urban center in Morant Bay. So it's a new look, total new area for growth and expansion. At the same time, Montego Bay bypass, it's pretty much complete as well.
Mobe is about 65%. The largest bridge in Jamaica is about 95% done. Now, what people I think don't appreciate is what that roadway is going to do for Western Jamaica. Because it takes the congestion off Howard Cook Boulevard.
Absolutely.
Right?
Brilliant.
Persons going to Negril or Hanover or even Freeport, they don't need to go through that. Right? In fact, maybe only people going to Freeport will drive on Howard Cook and to Bogue and Fairview. So one, it reduces traffic, safer. It opens up thousands of acres of real estate in that area that they're cutting because it's green of the green field there.
Yes. Yes.
So then now it should, all mean well, reduce the pressure on the housing market for tourism workers. Because as the hotel network is built out, and I gather for the next 3 years we're going to have 1,500 rooms, 2,500 rooms, 1,500 rooms. But on that same Rose Hall stretch, I mean, you have a Hard Rock going there and other brands of scope, casinos. There needs to be accommodation for workers. No, there won't be a land shortage.
Here's the elephant in the room, and it's in a good way. And we're not going international yet, but we have to touch it.
Sure.
Immigration. Jamaicans likely to be among those coming back home. Yeah, Prime Minister spoke a lot last year about labor shortage. Is there an opportunity for government to retrain some of these people coming back home, give them opportunity to take up some of those shortages that we talk about and really put spend into the economy?
Yeah, I believe so. I think that is more than possible. I think as well that influx will benefit safety and security. Because, you know, the common rhetoric is that a lot of criminality, though reducing, falling aggressively, is being driven by players who are not here. What has been happening is there was an arrest on site, I believe on Tuesday this week. A gentleman landed and was arrested for a series of crimes committed before he fled the country while on bail.
Okay.
So that's a double-edged, that's the two-sided benefit, I believe. It will be one, safety and security, but then two, hopefully a larger worker pool. Now, is it a trainable worker pool? Remains to be seen. I think so. I mean, let's if you even use a conservative estimate, let's say 20%, I definitely think that's in play. But all in all, the worker shortage is the worker shortage. No, it's inevitable we're going to have an influx of foreigners as well. Because as I've said on this program several times, I believe Jamaica is an oasis, most certainly in the Western Hemisphere. And I said it before Greg Fisher said it. Let the record show it.
You did.
Right?
You did.
And I've been on this program saying it, and he's saying no, our bonds are performing like investment grade bonds. I've been saying this about Jamaica for at least a year.
Yes, absolutely. Maybe more than a year.
Because all the fundamentals are there. We have US, location, we have a vibrant capital market. There's no other country, I will speak English, no other country in the region that ticks all 4 boxes.
Absolutely. Now let's take a look, since we've gone Donald Trump and his thing. Internationally, the markets has been in a tailspin. Interestingly, up to the end of last week, Nasdaq, Dow Jones, the S&P are all up.
Yeah.
All of them are up. Bitcoin has reversed a little bit, but I mean, we saw it at record highs earlier this year. Talk to me about the international capital markets, starting in the USA. What are investors looking at?
I'll tell you what they should be looking at. So we are on I believe about 75% of companies on the S&P have reported earnings as of Thursday.
Yes.
Okay. Now we have seen tech has been a mixed bag. Amazon had a slight miss on their guidance. Google had a slight miss, I believe, on revenue or cloud. Google fell aggressively. Google fell about 7% post-trading. Facebook was amazing. Meta Platforms amazing. I said Amazon, Google, Facebook. There's somebody else. NVIDIA got hit by DeepSeek, but their numbers are still good. I think the question is about the future for them. There's another tech player missing, but be that as it may. I believe tech is a mature industry now, and the speed of innovation has slowed. There's questions about finance, but finance is still finance. And the finance guys all had good results because of trading and investment banking.
Yes.
as seen within the global sphere with increased M&A. So we're seeing finances and so they're going infrastructure, fair to find, more M&A in that space. So I think now a lot of the outcomes hang in the balance. I think investors now would do very well to, one, avoid losers. You can have your portfolio meander along. You don't want to be stuck with losers right now. The U.S. economy is growing about 2%, thereabouts, fair. The job numbers came out today, they were okay. I think the economy is in need of a recalibration. So inflation is about 2.9. Unemployment is 4. Wage growth is 4.8. It is inevitable, in my view, that inflation is going to continue to rise, albeit slowly, because
Much
2% is not realistic.
Absolutely.
I believe the Fed will have to cut, and I believe that its inflation is sticky. And I believe the longer they take to accept that, is the longer they're just going to keep treading water. What has saved America? Europe is a disaster. China is still hobbling along. So there's no real force out there that I think is going to challenge them or cause them to have any material issues in the trade space, which gets us to tariffs, right? That's why I say it remains to be seen what the outcome, where everything settles, where these tariffs and world trade war is concerned. Because nothing is set yet. There was thought that Robert Kennedy was against vaccines. Now that we're hearing a reversal of that.
Absolutely.
A walking back of that. So until we can say things with certainty, as I said, it all remains to be seen. And I said to investors, they would do very well to have balance in their holdings and to avoid sectors under threat.
Talk about sectors. Real estate is always a biggie. China has struggled with their real estate market. We've seen mortgage rates climb. They've come back down in the last couple of
About
weeks.
7 now, yeah.
I think it came down just under 7. However, housing approvals have improved in terms of new build out and so on. What should we expect from the real estate market?
I said average performance. In New York, big cities, there's complaints about rentals.
Yes.
There's complaints about vacancies, and there's complaint about rental rates. Take up is, Manhattan, they're saying is somewhat stretched right now. In terms of, so I personally would not go overweight on real estate in that office space segment. Warehousing, I would think about. I'd be interested in warehousing because I can see a more vibrant inbound and outbound economy, whichever way. That I think that will continue. That logistical type enterprise.
And that hasn't settled down yet.
No.
Quickly, Ryan, the big guy in the room, oil. Now, President Trump has said oil prices need to come down. China is not yet at the level where they're buying big again. But US has been building inventory, and we now see Guyana coming on board as one of the biggest players. OPEC Plus has in some way dropped some of the cuts that they had. Is oil likely to stay pretty much where it is? Is it going to go up a little or down?
About, I want to say 3 years ago, I took a longer than that, but I took a deep dive in oil about, I'll say about 10 years now. I've watched all the dynamics play out. About a year and a half ago, when everybody was bullish on oil, I said, I am bearish I mean, at the time oil was $100, we sold everything.
Oh.
Since then, we've seen oil come down to in the 70s, probably high 60s at one point. Maybe the odd disruption, Iran, Ukraine, Russia push it up. I said that's not sustainable. That's a blip. The minute that settles down, because of speculation,
Yeah.
we're going to see a leveling off, which it did happen. There's been downside pressure since. The variables are straightforward. One, OPEC Plus has painted itself in a corner now because it has members that need oil production to survive, and they cannot sustain cuts indefinitely. So that's one. Two, Saudi Arabia fears losing market share, so they now want to pump anyway, even at the lower price. Because America is not America's a net exporter to China for the first time ever. They're able to meet the needs, though you will still want external supplies. So that's the other thing. But the other thing is Guyana is about 500,000 barrels per day now. By 2027, they'll be at 1.2 million per day. And they keep finding more oil. And Guyana is in the Western Hemisphere. And that is going to continue to drive oil supply on this side of the world. There may come a day where Venezuela's reserves come into play as well. Because Venezuela's issue is they don't have the capital to fund capital expenditure to make these reserves accessible or commercialized. So oil does not have a supply issue. And there's no demand issue because it's a fixed thing in our business, in our life. It's a staple. Therefore, any increase in oil prices is artificial, and I believe the fair market, the free market, will continue to suppress oil prices for the foreseeable future. I do not believe until 2027, the earliest, will we see any measure of potential for sustained increase in oil prices. Where me, all the players have reported soft earnings and profitability in light of this new normal. And I suspect it's going to continue.
And as we wrap, we could not have chatted without ChatGPT, DeepSeek, NVIDIA. Let's close on that one.
The simple refrain, follow the money.
Follow the money.
That's what DeepSeek did.
Yep.
And it hit NVIDIA by about 20% cumulatively overnight.
In one full sweep.
One swing.
Ryan, we have to talk more often. Absolutely great chat this morning. This is what people need to be looking at. You need to come and tell the people more often about where we need to go.
Just a phone call away.
All right. Ryan Strachan, I tell you, he's the man. The investment guru, stockbroker extraordinaire. But that's why we do these programs. That's why we tell you day after day. We give you information to make better financial decisions. Come back with us tomorrow morning at 9. Another insightful program lined up for you.